morning. Welcome to the video edition of Traders Espresso for the morning of Thursday, February 22nd, 2018. And the news is out. The minutes of the January Fed meeting were released yesterday at noon. And while markets had initially cheered the news that came out, they rallied right at noon, which was 2 o'clock Eastern time. They then hit a little bit of a roadblock and started to sell off. And what caused it was a sell-off in the bond market, in the Treasury bond market. So what I have done here is I have marked on the charts some key events. Okay, so this red line here, that's 2 o'clock Eastern. That was when the minutes came out, and as you can see, equities rallied pretty nicely at that point. A little bit of a retracement here, but then rallied right up until 12:25, so 2:25 Eastern time. That's going to be an important time. If you look at the other indices, I didn't mark it on the NDX, but I did mark it on the composite. Same thing, a rally here at 2 o'clock Eastern, right up until 2:25. That's the composite. Here's the I thought I marked it on the SPX, but we can here. So here's 2 o'clock here at 12:25. Okay, the Russell was the only exception. The Russell rallied not quite as much, at least in the first minute, as the other indices did, but it rallied pretty nicely after that, and then it hit a roadblock at 8 after, and it started to decline from that point. At 12:25, it was peaking a little bit. It was just starting to do that, but then the Treasury sell-off kind of nipped that in the bud. Now, if you look at the dollar did the opposite. That's going to be hard to read. The dollar initially sold off, which you can see right here on the Fed news, and hit a bottom right here at about 12:17, and then started to rally. Here's 12:25 when the bond sell-off started, and the dollar just rose gangbusters after that. Okay, and this is showing you basically what it did, you know, through the overnight, or starting in the morning. I don't have overnight here, but the rally continues. Last time I checked, the dollar was actually down. It's down 22 basis points right now. So I was going to show you the Treasury. So Treasury started to sell off. Okay, here, or I'm sorry, they started to, yields were falling here. Sometimes that can get confusing, which means that there was buying pressure on bonds, and then it peaked. The buying pressure peaked here at about 12:11, and then yields started to rise again. Okay, yields really spiked here at 12:25, and then you see this dramatic short squeeze. I guess I wouldn't really call it a short squeeze, but this dramatic rise in yields leading up into the end of the day. So it was this sudden sell-off in bonds, this sudden spike in yields, which derailed the market rally and caused the rally to, or not market rally, the market sell-off, and caused that sell-off to accelerate into the close, which you see right here, as well as here. So we had, what, 1, 2, 3, pretty much 4 waves of selling, and again, you see this acceleration into the close. You see an acceleration here at about 1 o'clock, so 1 hour before the market closes. So what exactly was it that the Fed said? I don't think that they necessarily said anything earth-shattering. The thing is, when these minutes come out, you know, everybody gets them at the same time. You know, some people have an advantage; they get it a little bit sooner than others, or they have, you know, computer algorithms analyzing the language, parsing the language, looking for changes. But the bottom line, the initial, at first blush, what was being kind of interpreted was the fact that nothing had really changed. The Fed was standing by this, acknowledging the need for rate hikes in 2018, which everybody knows, right? They were saying that they were pleased with the fact that inflation is growing closer to their 2% target. All of that, none of that is different. That's all come out before. So that first reaction is the market cheering it as good news that the Fed hasn't dramatically changed their language. They're not all of a sudden more hawkish, and the markets rise. But as you parse it a little bit more, which is this is something that takes time, and in this case it took about 25 minutes from the release. As people parse it, they start looking for changes in the language. A lot of times what you'll see when these minutes come out is the language almost looks like boilerplate from a previous release, but they tweaked the wording slightly. Couple of things that were tweaked was that the minutes contained the statement that there's substantial underlying economic momentum. Okay, that word substantial was important. Several members had cautioned against or cautioned about imbalances in the financial markets. Okay, well, what does that mean? That doesn't sound good, right? I think right now that the risks of there being 4 rate hikes instead of 3 has increased. Definitely the chances of there being 4 is probably more likely than there only being 2. I think the overwhelming consensus right now is still about 3. Okay. The Fed is still talking about increases in wage gains, which is they were looking for wage inflation. They were looking for that. They finally saw that last month, which is what started to kind of throw the market off. What's interesting is that, the Fed hasn't really hit its inflation target for the last 5 years. Now all of a sudden it's hitting it, and all of a sudden concern is going to, okay, we didn't hit our inflation number before, now we're going to overshoot. Like, that's the concern, right? They say the stock market climbs this wall of worry, which in some ways it does. So there was some mixed language. I'm just kind of looking at my notes from the Fed minutes to see if there's anything else that stands out. This part about imbalances in the financial markets. Well, what does that mean? Well, basically the statement is imbalances in financial markets may begin to emerge as the economy continues to operate above potential. So that part about operate above potential, that's probably taken by the markets as a red flag that, the Fed's getting more hawkish. They're thinking that the economy is going to overheat, and they might need to step up the pace of rate increases. Another statement in the minutes, which was concerned about the tax cuts. And economists, before the tax cuts were even passed, economists were coming out and saying, well, I don't know if we necessarily need these tax cuts. That could overheat the economy. The statements in the Fed minutes kind of echoed that sentiment that there was some speculation in the minutes that the tax cuts could translate into higher compensation for employees, maybe higher than the Fed would be comfortable with. Those are my words, not the Fed's. So that's, markets hear that and they start to get a little nervous. So, initially the reaction was, hey, this is good news, nothing substantially has changed, but then there's these underlying concerns being expressed about, the Fed is starting to telegraph some concerns, because the Fed, they never come right out and say it. They always telegraph what they're looking for to the future. But the Fed is telegraphing some concerns about the economy overheating. If this economy does overheat, we're going to see rate increases. So really, at the end of the day, it was the sell-off in bonds and then spike in yields, which caused some of these concerns. Where we stand right now, Asian markets were mixed. European markets were down, or are down broadly, kind of at the time I checked it. Futures are pointing to a little bit of a higher open. The Dow closed down yesterday. Let's see if I can find it here, because I never have these offhand. Or maybe not. Okay, never mind. They reset it. So the Dow closed below 25,000 yesterday. The Dow futures are pointing to a 76 or are up 75 points. The Nasdaq 100 futures are up 34 points. The S&P is up 13. And the Russell's up 8.8, so just about 9. So the leading the way again is the Russell, up just about 0.6%, followed by the Nasdaq 100, the S&P, and the Dow is kind of the laggard. That is pretty much it for today. Stay nimble. You know, the futures are pointing to a little bit of some firming at the open. I don't know. I would not be surprised if that didn't last. Let me just, put it that way. You never know. I mean, the volume on the futures is much lower before the open at 9:30 is much lower than the volume on the futures after the open, and there's a huge wave of activity that comes in right at the market open. So, this what looks like early gains for the morning could very well reverse suddenly. I would stand by my old rule of kind of wait to see what the markets do in the first 5 to 15 minutes. I would say 15 minutes in this case. Give these things a chance to play out. As tempting as it may be, like when I'm watching the futures, it's very tempting when you see, all of a sudden the futures start to spike, or, they suggest a higher open and they start to just plummet. It's tempting to get into that trade, but I have experienced this enough where right after an open or right after some news comes out, the market looks like it's going another direction, and then it does a head fake, haha, just kidding, and there's a vicious reversal and you're going to be sitting on losses. So definitely use stops, use tighter stops today than you normally would, I think. Kind of get a feel for what the market's doing. Adjust your stops accordingly. Yesterday afternoon I was using pretty tight stops because there was a lot of jerky motion back and forth. But then as that started to settle down, the market started showing some more definitive upside downside movements, and I was able to widen those stops and give those trades a chance to mature, which is what I like to call it. Sometimes you have to give your trade a chance to season for it to turn into profitability before you just decide to give up on it. That said, keep in mind, take small losses and cut your losers early and let your winners run. I don't know whether today's going to be a market where you're going to have that chance though to let winners run. So this may be a market today where you got to take profits when you've got them. And in fact, that's how it's been for about the last 2 weeks. So having said that, good luck everybody. Enjoy the trading day, and we'll see you on the live stream.